But let's talk about Nazara Technology. The company has reported a strong Q4. Revenue growth has come in at 65%, and it's their esports vertical, which is roughly about 50% of their revenues, that's driving growth. For the full year, the sales have crossed the 1,000 crore mark. The company has achieved a 75% top-line growth in FY23 with EBITDA margins at 10% as guided by the company. What's the way forward? We're joined by the company's founder and CEO, Nitish Mittersain, to take some questions. Nitish, morning. This is Rima here. What can you guide for FY24? What's the revenue and EBITDA margin that you're looking at?
Rima, we usually guide only in September of the year. Since we listed in the last 2 years. So I don't have a particular guidance for FY24, but I think FY23 has turned out exactly how we want. We've always been maintaining that we're going to drive aggressive growth in the areas we want to become market leaders in or maintain our market leader position like in the esports space. But we want to drive this on the back of profitability and not burn money or not get into losses. And I think that's what we've achieved again this year. As you see, we've grown 75% year on year on our base of 620 crores last year to 1,091 crores this year. But at the same time, we've grown on our EBITDA. We've delivered 109 crores of EBITDA. So I think if we're able to continue to drive strong revenue growth while remaining profitable and generating our own cash flows, I think that's a great place to be in a new media business like ours.
Nitish, directionally, will EBITDA margins in FY24 be higher than FY23? Is that what you're working towards?
I believe so.
Or are you happy with current levels?
Yeah, no, we'll always try and enhance EBITDA margins, and we will attempt to do so in FY24, but not at the cost of revenue growth or strategy growth, I would say. So I do feel that we should be able to increase EBITDA margins this year, but again, we will prioritize our growth. And if we get strategic opportunities to grow, then we will, also sacrifice margins in that extent. But we are also very clear that we will maintain profitable growth in the company.
So, Nitish, could you, add some sort of a numerical range to that? Because in FY22, maybe it was, the COVID phenomena that was playing out. You had an exceptional year in terms of margins. You were at 15%, I think, thereabouts. So what is a normal range to expect, given that you will balance out, as you said, you will balance out, the growth that you're seeking with profitability?
I think if you carve out our esports business, especially the Nodwin business, which is a strategic growth business for us and operating at kind of break-even or low margins, if you remove those revenues, you're already upwards of 15-16% EBITDA margin. I think gaming in general should be a 20% plus margin in the long run. And therefore, that's what we will chase over the next few years, I would say. In the short term, in FY24, I think... Again, I don't want to give specific guidance, but slightly higher margins than where we are is what we will try and achieve.
Okay, you are not giving us any specific guidance, Nitish, but if you can just take us through a little bit about Canopia. We have been seeing a little bit of a pickup come through after a few slightly tepid quarters. Without giving us a guidance, do you expect that trend to continue, where we'll continue to see a little bit of a pickup as the quarters go by? This is specifically for the Canopia business.
Yeah, I think Canopia as an app continues to do very well. Even Tim Cook, who visited recently, the CEO of Apple, tweeted about Canopia impacting positively kids all over the world. So that was great validation for us, for an Indian company to be recognized at a global platform. I think Canopia's cost per trial, if you see, has continued to decline, has further fallen to $35 odd per user in this quarter. And I think we've really stabilized that business quite well. We've seen growth, and we will see, not only we will see growth in FY24, but we will see much better margins as well, as what I expect, because we had taken 2 price hikes from $7.99 per month to $9.99 per month. And that has not impacted negatively in any of our other KPIs like churn, etc. So our profitability margin on that Canopia business has improved a lot. Also,
are you planning to take any more? You just mentioned the price hikes which you put in place. Are you planning to take any more price hikes here?
No, I think not in the immediate future. I think we've priced it correctly at this point of time. And now we'll focus on growth business. I think the other business we're very excited about, which forms part of our gamified learning sub-segment in the gaming space, is the Wildworks acquisition we did in last year. This is a very popular IP called Animal Jam for kids in the age of 8 to 14. And we worked very closely in the team in the last quarter to improve KPIs, to improve margins. And we are already seeing very good results. The EBITDA margins in their business has improved from 3% in Q3 to over 11% in Q4. And we expect that to get to 20% steady state very quickly. So I think that's another component of our business in the gamified learning that next year should show very positive results.
Nitish, on a side note, you had some money stuck via your subsidiaries in Silicon Valley Bank. We had chatted at that time, and I think the amount was 64 crore rupees. Have you got the money back?
Yes, thankfully we collected all of that money back. And we've put in some additional strategies to ensure that we don't get into similar space again.
Okay. Nitish, I have a slightly broader question on the rules for online gaming. I believe they came into effect from April, first quarter onwards. And some of the sort of highlights we all remember that anything which borders around, wagering or betting is not allowed. And then there are these self-regulatory organizations, etc. And I think there's a KYC requirement as well for anybody who's participating in any sort of online gaming. Does this impact any part of your portfolio at all? What would be the impact, if at all? I mean, even if it is operational costs in the near term, can you detail it out for us?
Sure. So I think there are two ways to look at it. One is from a short-term impact on Nazara. I think there's very minimal or no impact because our exposure to the whole skill-based real money gaming space is less than 5% of our revenue. And we don't see any adverse impact because of these new guidelines. I think if you zoom out, it's a fantastic step forward by the government. The government has finally this year recognized gaming as an important industry that's growing in our country. The budget clarified online TDS, TDS on online gaming. The new guidelines have created a framework on how games of skill can be regulated for real money. And I think that will boost a lot more capital investment into the gaming business in India, as well as provide a lot of scale-up opportunity. From a Nazara perspective, I think with regulatory clarity emerging on the real money gaming space, we are looking at actively investing and growing that business. And that's a big opportunity because the scale potential is very large. So I think
right
we are
now
definitely in the coming quarter take much more steps over there.
Okay, so Nitish, just to understand the numbers correctly, you said game of skill, real money gaming, that's 5% of your revenue right now?
That's right.
And you're looking to scale it up. Some idea, I mean, would you look at more acquisitions over here? Can we expect more action in FY24? To what extent, from 5%, to what extent will this be as a part of your revenue pie, say, this year?
Yeah, I think in this year, we will try and push it from 5 to 7, 8%. But I think we are planning a 3-year strategy where this sector would be a much larger contributor to our revenues, going up to 15-20% of our revenues. So I think a lot more growth can come from there. And there's a 3-pronged approach we are having. One is how do we scale our existing RMG business? How do we launch new games in the market, which will be appealing to the consumers? And also, we are in talks with many existing players to consolidate and acquire them. So I think through this 3-pronged approach is how we will try and scale up our RMG business.
Okay, so we're expecting more headlines on the real money gaming side then, whether it's acquisitions, collaborations, more tie-ups. We'll watch out for that, and we look forward to chatting with you as and when you have more announcements to make over there. Thank you for joining in today. Good chatting with you. That's Nazara Tech at the end of Q4, talking about also the impact of the new online gaming regulations that have come into force from April and will be regulating the landscape. Let's take